Welcome back, deep divers. Today we're going to be looking into Gilead Sciences. You guys send in some super interesting stuff for this one.
Yeah, we got financials, stock analyses, and even some stuff on value investing.
Exactly. So we're going to see if Gilead Sciences is a company you should maybe think about adding to your portfolio.
It's kind of like we're on a treasure hunt, right?
Yeah.
We've got this map with all the important spots on it. Like
Sure.
their business model, how management's doing the whole financial picture, good and bad, and using what we know from guys like the legend Warren Buffett.
Right.
We'll try to figure out if there's a big pot of gold at the end of this investing rainbow.
I love that analogy.
Yeah.
Okay, so first things first, what is Gilead Sciences? I mean, they're not a household name like, Johnson & Johnson.
Right, they're not a J&J for sure.
Okay.
But their history is actually really interesting. They've been around since 1987.
Wow.
And they started off focusing on gene therapy. But then in the early 90s, they made a huge change.
What did they do?
They switched gears to focus on antiviral treatments. And that was a big turning point for them. It really set them up for success in HIV/AIDS and liver disease treatments.
Interesting. So they've got this long history in antiviral treatments, but what are they offering now? What does their product lineup look like?
It's surprisingly diverse. They've got 22 products being sold right now.
22.
Yep. 22 across a whole bunch of different areas.
Wow.
They're best known for their HIV/AIDS treatments like Biktarvy and Genvoya, but they've even got a COVID-19 treatment, Veklury.
That's impressive. 22 products. They must be pretty established, especially in those antiviral markets.
They really are. One of their biggest innovations was actually developing single pill treatments for HIV and hepatitis C.
Oh, wow. I can only imagine how that changed things for patients.
Oh, absolutely. Taking just one pill a day instead of a handful was a game changer.
Right.
It made it way easier for people to manage these really complex conditions. So that shows that they're all about innovation and improving things for patients.
Yeah. That's really great. But as investors, we want to know if they can turn that innovation into profit, right?
Exactly. And that's where those value investing principles come in. Remember, we're not just looking for a good company. We're looking for an undervalued company, one that the market might be missing right now, but has those strong fundamentals and a real potential for growth in the long run.
Like a hidden gem kind of thing.
You got it. So how do we see that potential with Gilead? What should we be looking at?
Yeah, what should we be looking at?
Well, one of the most important things is their management team. We need to check out who's making the decisions, their track record, and whether those decisions line up with these classic value investing ideas.
Right.
Right now, the guy in charge is Daniel O'Day. He's the chairman and CEO. He's got tons of experience from his time at Roche, which is a huge name in pharmaceuticals.
Okay, so he's got the experience. What about their decisions, though? Have they been using Gilead's money wisely?
Now, this is where things get a little more complicated. Back in 2011, they made a bold move. They bought Pharmasset for a whopping $11 billion.
$11 billion?
Yep. And this was a risky move because Pharmasset wasn't actually profitable at that time.
Oh, really?
Nope. They were still in the development phase. But their pipeline had potential. They were working on treatments for hepatitis C. That could be huge.
I see. But didn't you say that value investors like Warren Buffett usually go for companies that are already making money? This sounds like a pretty big gamble.
You're 100% right. This purchase was a bit of a curveball. It didn't really follow the classic value investing playbook.
And did it pay off?
It actually did. In the end, they were able to develop Sovaldi and Harvoni, two incredibly successful hepatitis C drugs.
Oh, wow. So it was a risk that worked out.
Yeah, but it definitely makes you think about whether Gilead's management always sticks to those core value investing principles. Sometimes you got to take a calculated risk to get those big wins.
I see. So it's not just about having an experienced CEO. It's about whether they're actually making smart decisions for the company. Okay, let's move on to Gilead's financial health, the nuts and bolts of how they're actually doing. What are we seeing there?
Well, their financials have been a bit of a roller coaster. They've had their ups and downs.
Okay.
Remember those blockbuster hepatitis C drugs, Sovaldi and Harvoni?
Uh-huh.
Well, they caused this massive spike in revenue and profits for Gilead back in 2013 and 2014.
Sounds like those were the good old days.
They were. But as the market got more crowded and competition grew stronger, Gilead's revenue growth started to slow down.
So not so great anymore.
Well, in 2024, their revenue was $28.3 billion, which is a decent 3.31% growth year over year. But their earnings per share took a big hit. It landed at just 10 cents.
Oh, wow.
Yeah, so that might mean they're having some trouble staying profitable in this more competitive market.
Okay, so that's something to keep an eye on. What about their profitability overall? Are they still making good returns?
Historically, they've had really high profit margins thanks to their innovative drugs and their strong position in the market. In 2024, their gross margin was a healthy 77.80%, and their operating margin was 39.53%.
Okay, so still pretty good.
Yeah, but those numbers might be going down as competition continues to heat up.
So strong, but maybe not as strong as they used to be. All right, what about their balance sheet? Are they carrying a lot of debt?
Now, this is another interesting part. As of 2024, Gilead has a pretty big debt load. It's about $23.25 billion.
Whoa, that's a lot.
It is. It's something you definitely need to think about as a potential investor. That debt could make it harder for them to invest in the future or go after those strategic acquisitions we talked about earlier.
Yeah, that makes sense. So does that mean they're in a risky position financially?
Not necessarily.
Yeah.
They also have $6.7 billion in cash reserves, which gives them some wiggle room.
Okay, so that helps.
Yeah, it does. But it's a balancing act. They need to manage that debt carefully while also making sure they have enough money to stay competitive and keep innovating.
Right. And let's not forget about their dividend policy. They started paying dividends back in 2015, and they've been increasing them ever since.
Yep, that's definitely attractive to investors who want consistent returns.
But can they keep paying those dividends with all this debt and potential issues with profitability?
That's the big question. The sustainability of their dividend depends on them having strong cash flow and profitability in what's becoming a pretty crowded market. It's a tricky situation for sure.
So we've got Gilead, this innovative company doing well in antivirals, but they're also facing some challenges: slower growth, more competition, and that big pile of debt. It's a mixed bag for investors, wouldn't you say?
It is, definitely. And we got to remember there's a whole market out there watching Gilead whispering opinions and placing bets on what happens next. So we got to factor in that market sentiment too.
Okay.
What are the experts saying? How are people feeling about Gilead's future?
Well, the research we have here says the general consensus from analysts is outperform. That sounds pretty good, right?
It is. It's like getting a thumbs up from the people who study companies and markets all day long. They're saying Gilead's stock is likely to do better than the overall market.
Oh.
They've even set a price target of $101.24, so they think the stock could climb even higher.
That's encouraging.
It is. But analyst ratings are just one piece of the puzzle.
Yeah.
Remember, they're not guarantees and they can change.
We need to do our own digging and form our own opinions. So speaking of opinions, who are the big players holding Gilead stock? Is it mostly everyday investors like us? Or are there bigger institutions involved?
That's a great question. It gets to the heart of understanding who owns the company. In Gilead's case, a big chunk of their shares are owned by institutional investors.
Like who?
Think pension funds, huge mutual funds, the big players in finance.
So these aren't just people messing around in the market. These institutions are putting down serious money on Gilead's future. That says something, doesn't it?
It does. When these big institutions invest in a company, it usually means they believe in its potential for the long haul. They've got their own teams of analysts doing research, so their investment carries weight.
But what about the other side? Are there people betting against Gilead? You know, the ones who think the stock's going to tank?
Ah, you're talking about short interest.
Yeah.
That's the percentage of shares people have borrowed to sell short, hoping to buy them back later at a lower price and make a profit.
Okay.
We don't have the exact numbers here, but understanding short interest is super important.
So high short interest means a lot of people are expecting the stock to crash.
Exactly. It can be a sign that people have doubts about the company's future. On the other hand, a low short interest suggests that fewer investors are expecting things to go downhill.
It's like a measure of how pessimistic the market is. That's interesting. But even with positive analyst ratings and big institutions on board, there are always risks, right? It feels like trying to walk through a minefield even with a map.
You got it. And that brings us to a really crucial part of our deep dive risk assessment. We got to identify those potential traps, those things that could trip up even the most promising company. It's like doing a SWOT analysis, looking at strengths, weaknesses, opportunities, and threats.
Okay, let's map out that minefield then. What are some of the biggest risks for investors thinking about Gilead?
Well, one of the biggest hurdles for any pharmaceutical company is dealing with all the regulations and political stuff. The industry is super regulated, and any changes in healthcare policies, drug pricing, or even how new drugs get approved can have a huge impact on profits.
So it's not just about science, it's about understanding the political game and how that could affect Gilead's bottom line.
Exactly. For example, the government could decide to lower drug prices or make it easier to get generic medications, and that could squeeze Gilead's profits and eat into their market share. They're constantly balancing innovation with the need to make drugs affordable.
Makes sense. What other risks should investors be thinking about?
Well, we talked about competition before, but it's worth repeating. Gilead is facing some tough rivals, especially in HIV and hepatitis C treatments. New antiviral therapies are always popping up, and competitors are always trying to catch up.
It's like they're in a constant race to stay ahead of the pack. Kind of like that Red Queen's race in Alice in Wonderland, where you have to keep running just to stay in the same place.
Perfect analogy. And then there's the ticking clock of patent expirations. When patents on their big drugs run out, it opens the door for cheaper generic versions. And that can really hurt revenue and profits. Gilead needs to keep getting new drugs approved to make up for those potential losses.
So it's a race against time. They got to keep innovating to stay ahead of the curve. What about their dependence on just a few products in specific areas of medicine? Isn't that a risk too?
Absolutely. Right now, HIV and hepatitis C treatments are a big part of Gilead's income. If anything goes wrong in those areas, like sales dropping, new safety concerns, or even better treatments from competitors, it could shake their whole financial picture.
So they need to diversify. They can't just rely on a few products, especially in an industry that's changing so fast.
Right. And what about legal risks? It seems like pharmaceutical companies are always getting sued or facing regulatory hurdles.
Yeah, that's true. What's the deal with that?
Well, lawsuits are just part of the game in this industry. Product liability claims, patent disputes, problems with regulations. All of these can drain their resources and hurt their reputation. It's a minefield they got to navigate carefully.
Sounds like investing in a company like Gilead isn't for the faint of heart. There's so much to think about, both good and bad.
That's for sure. It takes careful thinking about their strengths, weaknesses, opportunities, and threats. We've covered a lot today. Their business model, their management team, how healthy their finances are, what the market's saying, who owns the company, and all the potential risks.
It's like we've been putting together a puzzle, trying to see if all the pieces fit and make a clear picture. But I bet some of our listeners are still wondering, okay, so what? Should I buy Gilead stock or not?
That's the million-dollar question. And there's no easy answer. It all comes down to how much risk you're comfortable with your investment goals and your own take on Gilead's future.
So we need to weigh the potential rewards against the risks. What are some things that could happen for Gilead, both good and bad?
Okay, so on the bright side, imagine Gilead comes up with a bunch of new blockbuster drugs. Maybe they make breakthroughs in cancer treatments, fighting inflammation, or even those cutting-edge areas like gene editing.
Okay.
And picture them expanding into new markets, conquering new territories.
All right.
Now add in some favorable decisions from regulators and the ability to keep drug prices strong, and you've got a recipe for growth and profit.
That's the dream scenario, right?
Yeah.
Steady growth, those consistent dividends, maybe even some amazing discoveries that send the stock price skyrocketing.
You got it. But we got to be realistic and consider the flip side. What if competition gets even tougher? What if their new drug trials hit a roadblock? Imagine safety concerns popping up, patents expiring, profits shrinking, or a bad market hurting their bottom line. Any of these could spell trouble for Gilead.
It's a tightrope walk.
Right.
They need to keep innovating, diversifying, and performing perfectly to stay ahead of the game. But that's where those value investing principles come in, right?
You know, do you believe in Gilead for the long haul? Does their management team have what it takes to overcome these challenges? Are you okay with their level of debt and how reliant they are on just a few products? These are the big questions you need to think about.
It's like being a detective, gathering all the clues and making a judgment call based on the evidence. But remember, folks, we're not financial advisors. This is just our deep dive into Gilead, looking at it through the lens of value investing.
Right, we're just sharing information. It's up to you to make the final decision.
We've given you the map and compass, but you're steering your own investment ship.
That's what's so cool about value investing. You got to do your research, really understand the business, and then make a smart decision based on your own view of the risks and the potential payoff.
It takes the guesswork out and gives you a solid way to think about things. But I'm sure some people are still thinking, okay, but should I buy Gilead stock or not?
I wish we had a crystal ball. But seriously, we can't tell you what to do. What we can do is give you some things to think about, some questions to ask yourself as you do your own research. Gilead's done amazing things in antiviral treatments. They've created life-changing medications for HIV/AIDS and hepatitis C, but those markets are getting crowded. Competition is tough, and those patents won't last forever.
So can they reinvent themselves? Can they do it again in areas like cancer or inflammation? Can they use new technology to create the next big hit drug? There are a lot of question marks.
Definitely. And for a value investor, those question marks are exactly what you need to investigate. Go beyond the stock price and the headlines. Really dig into their research and development pipeline. Look at their partnerships and acquisitions. Try to understand the leadership's vision for the future.
It's about finding those signs of sustainable growth, those clues that Gilead can handle the tough times and come out even stronger, like those green shoots that pop up after a wildfire.
Exactly. And remember, value investing is a marathon, not a sprint. It takes patience, discipline, and the guts to bet on companies you believe in, even when the market's not so sure.
Speaking of betting on companies, I've been getting tons of messages from listeners asking for specific stock suggestions. Companies that fit this value investing style.
Me too. And while we can't give personal financial advice, we can definitely point you in the right direction. If you're interested in Gilead Sciences and want to find more value investing opportunities, check out the comments section below. We've got some resources and even a few stock suggestions to get you started.
Consider it a little bonus for joining us on this deep dive. And if you're hungry for more deep dives into finance and investing, make sure you subscribe to the Stock Analytics AI YouTube channel. We're all about finding those hidden gems, explaining those complicated topics, and helping you make smart investment decisions.
Knowledge is power, especially when it comes to your money.
But before we go, we got to give you our usual disclaimer. This deep dive was just for educational purposes. It's not financial advice, and we're not financial advisors. Always talk to a qualified professional before making any investment decisions.
The information we shared was based on public data and our own research. AI played a huge role in helping us gather and analyze all that information. But remember, even the smartest algorithms can't predict the future perfectly.
So do your own research, think critically, and invest wisely.
Happy diving, everyone!